Welcome to another S&P 500 analysis. Today is April 29, 2022. Are we there yet? That's probably one of the most asked questions right now about the S&P 500 and the stock market. But where is there? Well, it's all depends. Some are asking, is the S&P 500 in a bear market yet? And some are asking, is the S&P 500 at the end of this correction yet? Or at the end of the current sell-off? In this video, we'll look at the market sentiment, the market internals, and the price action of the indexes and see if the S&P 500 is at the end of the sell-off or correction, or is the S&P 500 in a bear market or going into a bear market. Stay tuned. Before I begin, I need you to smash that thumbs up to help me promote this video on YouTube. Also, if you have missed the video I have posted during the week, and to avoid missing future video from me, be sure to subscribe to this channel and turn on the notification by clicking on the notification icon. Let's start with this weekly chart of the S&P 500. As you can see, ever since it broke this evening star pattern, we see that it has dropped over almost 8% or 356 points. And this week, the range is a little bit smaller than last week. Last week was 245 point range, and this week it is 184 points, and it lost almost 140 points or 3.27%. And as you can see from these candles here, it's been one-time framing down for the last 4 weeks. And what we mean by one-time framing down is the low of the candle is lower than the previous candle. So you can see the last 4 weeks is essentially putting in lower low. And also been closing below this 10-week and also this 40-week moving average. And they both are sloping down. So based on these technical, the weekly trend is down. Looking at this sentiment chart here, as you can see, the VIX here closed at 33.4 on Friday, and it's been hovering above this 30 level for the last week or so. So definitely the market participants are getting more fearful now. In addition, you notice that the put-call ratio is getting close to this 1 level, although it did not get above 1. It did close at 0.97 on Friday, and certainly it is moving toward that 1 level. So definitely the market participants are buying more puts than call and also putting on a lot of hedges to protect further downside. And look at the market internal. We see that the up-down volume ratio here today on Friday was a little bit over 6-1 in favor of the down volume, and also the advanced decline. There was almost 2,000 more declining issue than advancing issue versus the prior day that we got a nice bounce off of the previous day low. And we saw that the up-down volume ratio was 4-1 on the upside, and the advanced decline with the advancing issue outnumbered the decliner by 1,852 issue. So you can see that it is getting quite volatile on the upside and the downside. And although I did post a tweet on my Twitter channel to say that don't look at these morning star as a bullish pattern, because not all morning star pattern end up like this, because there are a lot of these morning star pattern end up down, right, going down instead of going up. So go and take a look at that tweet on my Twitter account, and you can see what I mean by a lot of these morning star pattern turn bearish instead of bullish. And looking at the new 52-week high versus 52-week low, as you can see, the New York Stock Exchange, the number of stock making new 52-week high is in a double-digit, lower double-digit. Like on Friday, it was only 24, and on Thursday, with a huge rally, it's only 22. And the number of stock that making new 52-week low, as you can see, on Wednesday, it was 595. And on Thursday, it was 525. And although this today, Friday, it was only 335, but still it's been pretty much dominated by the number of 52-week low versus 52-week high. Now, remember we were talking about this negative divergence that we need to get the S&P 500 below this low? Well, we got that resolved today. So this negative divergence is been resolved by today's close. And we'll look for positive divergence now to see when we're going to get a reversal or a turnaround. And here looking at the NASDAQ, here's the NASDAQ 100. As you can see, it's also turn bearish on this morning star type of pattern here. And as you can see, it's 3.7 to 1 in favor of the downside. So it's not as negative at the New York Stock Exchange, but the advanced decline is also over 2,000. It was 2,200 and more declining issue than advancing issue on Friday. So again, it is still pretty broad market decline. And here in the NASDAQ, the 52-week low still dominate the 52-week high. Notice that today it was 525 stock making new 52-week low versus only 34 stock making new 52-week high. You can see that it's been at the lower two double digit on the number of the stock making new 52-week high, and we are in the higher, the triple digit on the number of stock making a new 52-week low. And looking at the cumulative AD line from the NASDAQ and also the NASDAQ 100, they basically are in sync. They are both pursuing lower low. So from the sentiment and the market internal, we are seeing the market participant are getting quite fearful and start getting a little bit more bearish now. In addition to that, we're also seeing that the decline is getting more broader in terms of market participant, the participation by number of stock that is declining. And also the number of new high and number of new low, there's still a lot of issue, a lot of stock is making new 52-week low. So there are still a lot of weakness in the market, and so we expect to see further downside. Now let's take a look at the price action of the indexes, starting with the S&P 500. Again, I will continue to use the weekly chart instead of the daily chart, so we can see the bigger trend of these price action. So you can see right now, as of Friday's close, it is sitting at 14.22% below the all-time high. So definitely it is in the correction territory. It is not in a bear market territory yet. Now we are looking for this to dip below this low here, which is 4114.65. And once you dip below that, then we expect to see it come down toward this zone here at near this 4,000 area and possibly dip into this 27.2 extension somewhere around 39.23. So again, even though that it come down here, we are still not looking at the S&P 500 to get into the bear market yet, because if we move this thing down, let me move this down, and if we project it down here, that is only 18%, 18.5% from the high. So we have to get below 20% in order to classify it as enter the bear market. So right now, we're essentially looking for this low to get tested, and depending on what the price action look like when it get down to this level, then we will reassess whether it's gonna continue to dive down and possibly get below this 39.23 and possibly get into this 41.4 at this 38.23. Then we will enter the bear market. As you can see, it is a little bit over 20% loss from the all-time high. So that would put it officially in a bear market when it get down to this 38.23. But right now we're still watching for it to come down to this level at 39.23. And first is basically the round number, psychological number 4,000. If we are seeing a little bit of a bounce, then we still could see it bounce back up to this 42.70 area. Okay, so it's not like it's just gonna go straight down here, because we could see a little bit of a bounce back up here. But again, we're essentially looking for a continued downside, at least taking out this low. And for the NASDAQ 100, you can see the NASDAQ 100 is already in a bear market, right? It's, it lost more than 20%. It lost 23.32% from its high here. So definitely the NASDAQ 100 is in a bear market. Right now, we're basically looking for this thing to come down to somewhere around this 12,050 and possibly get down to the 12,000 level here. So we'll keep an eye on that to see how it will react when it get down to these level here. Sure, we could see a little bit of a bounce, but I don't think it will come back up to these level here anytime soon to this 14,396. But be looking at more of the downside move in the coming week. And for the Russell 2000, you can see the Russell 2000 is also in a bear market territory. It lost over 24% from its all-time high here. And right now, we're basically looking for this thing, basically on this projected move, is somewhere around 1748 and possibly move down to the 1724, 1725 level. We'll be keeping an eye on a further downside to this level here. Now, if we could bounce back inside of this range here, then maybe we see a little bit of a chop and then come back down. But again, we're basically looking at this trend line here, and it probably will encounter resistance against this trend line if it decides to bounce back inside of this range here. The transportation had a couple good weeks, but this week is also, fall back in line with the rest of the market, and it is back to 18.63% from its high. So it's not back into the bear market yet, but it could if it continue to, pull back and get back into this level here at 14,133. So we'll see would it be able to make another stab at this 38.2 up at this 15,705, because if it's unable to get above this 15,067, might be looking at the transportation come back and retest this low here at this 14,133. And for the Dow Jones Transportation, it finally got into the correction territory. It dipped below 10%. It lost 10.8% from its all-time high. So right now, we essentially are looking at the possibility of coming down to retest this low at 32,272. So we'll be watching at this low, and then when it breaks this low, we're going to see how well it hold up at this 32,000. And if it doesn't hold up, we're essentially looking for a fallback down to this 29,000 area. And this is where this gap is. So maybe it will come down here and fill this gap. And the New York Stock Exchange Composite Index also getting into the correction territory as of last Friday, because it lost 10.52% from its high here. So that put it in a correction territory. Right now, we essentially are looking for this thing, this major move down here, and that puts it at 15,223. So we'll see what it get down to this level here and see how it will react there, and see will it just continue to fall, and eventually we'll be watching at this 14,183 level. But for now, we're basically looking at this 15,223. And if it bounces back up, then we're basically looking at the possibility of coming back and backtest this 16,094 area here. And looking at this 10-year yield, we did not see the 3% print this week. We're expecting to see a 3%, but it did pull back a little bit. Remember, we were talking about this major move from this cup and handle pattern, and essentially this 100% major move will put this thing up at this 3%. And you see that last week, we saw it got as high as 29.54, in other words, 2.95%. This week kind of pulled back a little bit, but we still expect this thing to go up to that 3% mark in the near term. Now, looking at this US dollar, it got almost as high as 104 here before it pulled back, and it closed at 102.965 on Friday. So I wouldn't be surprised to see a little bit more pullback, maybe possibly come back and backtest this 101 area or make another push up. So we'll see how much of a pullback we'll get on Monday and on the following day until the next FOMC meeting. So that'd be interesting to watch the dollar. And if this thing continue to push up, then it put in a lot of pressure on the Fed here to try to get the dollar down, and also try to raise interest rate at the same time to gain control of the inflation. And for crude oil, it's still holding above this 100 level. It's sitting at this 102 area here. It's not going away, and most likely I see it break this trend line here and continue to move back up and retest this 130 level here. So we'll keep an eye on crude oil. Definitely, the crude oils continue to move, and against a strong dollar, that is remarkable. Now, for the precious metals, silver actually pulling back quite a bit here right now. So we'll see will it be able to come back in and hold this 22 level and see if we could get a bounce, because if it does, then we could look at this right here. Look for this to hold support, and the next breakout at somewhere around 26. Get a little bit of a bounce and play a little bit of a swing long up to this 26 area. So that'd be interesting to watch when it comes down to this $22 level. Keep an eye on that and see how well silver will be able to hold up this level here. And gold is still chopping around up here, up to this near this 1900 level. So holding this trend line here, as long as it holds above this trend line, I think gold is still continue to move on the upside. So we'll see would it be able to come back up, take out this 1964. If you could take out this 1964, then be watching this 2078.80, and that would be one of the levels that we'll be keep an eye on. So just watch this level here to see what this thing get a little bounce here. So essentially you get a little bit of an evening pattern here, right? So maybe this time this evening pattern will be a bullish a morning pattern, morning star pattern, and then pushes up. Okay, so keep an eye on that, because this is a nice little bit of a hammer weekly candle, although it is a little bit of a bearish candle, but it doesn't matter because the price action could very well set up for a little bit of a move up, get above this 1964.90 and pop it up into this 2078. So keep an eye on gold and silver on those critical level. Now let's take a look at the SPY, the ETF for the S&P 500. You can see I have this value area here, this composite value area, and also this right here, this extension for the Fibonacci retracement. You can see that it came up, got close to this 786, but it did get above the 618, and now it retraces back. And if it break this low at this February low, the 410.64, then we're essentially looking for this thing to come down toward this 272 extension near the 392, 391 area. In addition to that, remember we were talking about the value area, the this volume profile setup of look above and fail. And when it failed, we're essentially looking for this thing to retrace back to the other side of the value area. And you can see that it booked this value area low. So one of the projected move using this setup is the value area, the range of the value area. So I basically project this range here down to this area here, and you can see that it is somewhere around 395 area. So it's close to in confluence with this 392, this 0.27 level. So keep an eye on these level on the downside. If it come up here, we could see a little bit of a back test toward this value area low, and that would be somewhere around 424 area. And for the QQQ, the ETF for the NASDAQ 100, we also have this value area that we are talking about in the last few weeks. This composite volume profile, and also this look above and fail. And you can see that it retraced back down to the other side of the value area and booked the value area low. So again, we're basically doing a major move of this value area range and projected down here. And essentially, we are looking at this somewhere around 297, 298 area. So, and that is in confluence with this 0.27 extension somewhere around 294. So keep an eye on this area here, the 297, 298 area, and then the 293, 294. Now, once again, if it do a little bit of a back test, we can see it come back up and try to test this value area low, and that would be somewhere around this 329.5, 330 area. And here, looking at the IWM, the Russell 2000 ETF, it too is breaking down below this value area low, this value area here from this composite volume profile. And once again, it's essentially the setup, the look above and fail setup, and we trace back down to the other end of the other side of the value area. Now it's broken down. So we are again using the projected move of the range of the value area and project this thing down to somewhere around 180. So keep an eye on this 180 level, 180, 181. And that is also near this 0.27 extension of 177. And that is based on this swing here. And you can see that it came up to this 618 and then got rejected and pushes down So right now it dipped below this low here, and most likely it will try to work its way down to this 0.27 extension near this 177 and a quarter. Now let's take a look at the FANG stock that we reported this week, and I have put it on a video throughout the week. So if you missed it, I would highly suggest that you go and subscribe and turn on the notification icon so you won't miss any future video when I put them out during the week. Okay, so taking a look at Facebook, and this is the range that I have projected based on previous week close, previous week's Friday's close, and also what the option market is pricing in. And basically I was projecting calculated to be plus or minus $24. And as you can see, Facebook came up to that top range here with the, reporting earning beating the street expectation. So it came moved back above that a little bit, but it did close below this range, inside of this range. But you can see that it is getting near that 24, that plus 24, based on the Friday's close from previous week. So so that's not too bad on Facebook, and that's been lifting the Nasdaq on Thursday here. So you can see that right now I do anticipate Facebook to pull back and probably come down and fill this gap here in the coming week. And here's Amazon. Amazon is the big miss. Right? I have it projected at plus or minus $206. And when I put out the video on Thursday, I say, right now, Amazon is sitting at the lower edge. So in order for this thing to move, this minus $206, it's more likely you have to move back up to near the Friday's close. And as you can see, that it did that, right? It came up on Thursday to close to near the the previous Friday close. Then, as soon as the report came out, unfortunately, it was more than $206. And the preparation was correct. It came up and then make a preparation of moving either plus 206 to the upside to this top edge of 3013, or minus 206 on the downside to this 2,761. But as you can see, it really got hammered, and it closed down right here at 2,485. So Amazon really took a beating after missing this earning here. It was down 14%, down $406. And the other one that reported was Apple for this week. And you see Apple, again, it was down here at the lower half, near the bottom of this range here that I projected from last week. Friday's close is plus or minus $9 move. So we're also saying that this price had to come back up to this Friday's close. So on Thursday, before the earning came out, before the close, it actually came above that. So again, it made its move. It did not move $9, from the Friday's close. So it closed, pretty much, in the lower half of this range here. So it was down on Friday. Today it was down 3.66% or $6 or so. So there you have it. And those are the few FANG stock that I have put out video on throughout the week, and also a little bit of a coverage on the SP 500. So again, just a reminder, be sure to subscribe to this channel and turn on that notification icon if you already subscribed. That way you will get notified whenever I put out these videos throughout the week. Now, just do a little follow-up on Tesla. Remember we were talking about Tesla, getting into this range here, right? These low volume node, and basically move down to these low volume node and chop around here. So right now it's sitting somewhere around this 618 retracement, and we likely see Tesla to come down and dip below this composite point of control here, somewhere around below this 840, and I wouldn't be surprised to see Tesla to come down at this 796 or this 0.786 sometime next week to test this level here, when we see the market continue to move downward. Looking at these heat map, we could see how broad the downside for the S&P 500. Notice almost 100%. I mean, basically 99.9% pretty much is in the red. You only see a few that is actually printing green. And also looking at the Dow Jones, the only one on your screen is Honeywell and a little bit of from Merck. And then on the Nasdaq 100, it's basically pretty much almost everything is in the red except for a few stock here. And then the Russell 2000 is also predominantly in the red here. So again, we can see from these heat map, there's a lot of stock on the downside. So there is still a lot of weakness internally in the market that has to be washed out. In summary, the market participant is getting more fearful now, and it's getting also a little bit more bearish. We can see that by the put-call ratio getting close to that one level, and the VIX is above 30. In addition to that, we're also getting a broader market participation in the downside because we're seeing more down volume and also more declining issue on a down day now. So we'll get a little bit more broader market participation on that downside move. And we can see right now we are still in a correction territory for the S&P 500, the Dow Jones Transportation, the Dow Jones Industrial, and the New York Stock Exchange. Although the Nasdaq 100 and the Russell 2000 are in a bear market. So we'll be watching, see how well the S&P 500 will stay away from the bear market territory and how well it will hold up when it comes down and take out that February low to see what the price action will look like. So are we there yet? Well, not yet. We're still watching. So, but be careful and be sure to smash that thumbs up to help me promote this video. Thank you for watching and stay safe.